Hello and welcome back to The Note. We know that what Mario Draghi says can move markets, and this time we've heard from him both word and deed. A very dramatic package of monetary policy measures, including even negative interest rates on deposits for the first time ever, plus a fairly strong hint that there could be more to follow. Should the market be impressed? What is the ECB up to? With me now to discuss this is the Vice Chairman of BNP Paribas Investment Partners, William de Vijlder. William,
hello.
Thank you very much for joining me today.
Welcome.
Now, I suppose one of the first big questions is why are they resorting to targeted LTROs this time? What reason do we have to think that that will work? And we have to take a look at our first chart that you've suggested to us, showing where demand for credit is heading. Does this suggest that there really will be a good uptake from the liquidity that the ECB is offering?
It does, and the rationale to use the targeted LTRO is, of course, that the real problem in the Eurozone is that monetary transmission is not working properly across the Eurozone. In some parts it does, in other parts it doesn't. What you see here is that from the bank lending survey, banks are of the view that demand is going to pick up. At the same time, when you look at it from the supply side, banks are now being given an opportunity to go to the ECB, get money almost for free. The demand side is improving, and also with the asset quality review being conducted simultaneously, they will have the kind of the green light to say now you can also increase your credit portfolio. And that is something which then over the course of time would make this operation very effective.
Now, I guess one of the key things about the European market compared to the US is that it's much more dependent on banking, much less dependent on capital markets because it has a much smaller capital market. Is the aim here to strengthen the banking transmission mechanism or to try to build capital markets, or both?
I think it's both, and you have a short-term measure which is the target LTRO, at the same time stepping up the effort to have a proper ABS market where you can then put in bank loans and so on, and then opening the way as well for quantitative easing via ABS I think is something which admittedly will take more time, but I think in the long run will have a profound impact in facilitating this trend-wise transition from a bank-based funding of the economy to a more capital markets-based funding.
Now, one of the big ways in which people have viewed this so far is that everybody wanted to know, are we going to have quantitative easing based on government bonds, a la what we've seen from the Bank of England and from the Fed? We haven't had it. If we take a look at a chart of the ECB's balance sheet, you can see, thanks to the LTRO steadily having been repaid over the last year or so, that it's actually contracted quite dramatically. Do you think the market really needs to see a big expansion in that balance sheet, and it really needs to see full QE of government bonds?
I think there's a risk in focusing too much on the size of the balance sheet. The big expansion of the balance sheet that we saw at the end of 2011, 2012 was of course necessary. That was the first LTRO transactions because there was an issue in terms of bank funding. What we're talking about now is how can you give an acceleration impetus to the economy.
Right.
And so focusing on the size of the balance sheet, I think is kind of forgetting that in the US, you have trillions of excess reserves parked on the Fed balance sheet. What's happening here is that it has shrunk, admittedly, but at the same time, the very short interest rates, EU and YA, have barely moved up. And now there will be even pushed down further. So this does mean that there is no shortage of liquidity within the Eurozone system. What happens with the decision yesterday is that there's now a push being made to make money available to generate credit and to provide credit to the private sector.
Okay, now one final question. Obviously there is this big issue with the banking system. There's also a concern about deflation, particularly as it relates to the level of the euro. The euro has not weakened at all on this news. Do we need something like QE simply as a blunt instrument to push the euro down? How important is the level of the euro?
The problem of the euro is that decisions taken by the ECB make assets in the Eurozone more attractive, be it bonds, be it corporate bonds, be it equities. So we will have an inflow from money from abroad. So this is underpinning the euro because people do not bother to hedge, quite rightly, because the European Central Bank is a conservative institution. So what we really need to see as well is that we get closer to the first rate hike in the US to see the big change in the euro-dollar rate.
Okay, William, thank you very much
Welcome.
Indeed. We've heard the words. It looks as though we probably need yet more in terms of deeds from the ECB, but plainly they are targeting what is a very real problem at the moment, the banking transmission in the periphery, and they plainly have a reason to believe that targeted LTROs will help.